Guys, we're going to be hitting this theme throughout the hour tonight. Problems that are more or less under control now, but markets worry they could escalate and get out of control in the future. As you look around the markets tonight, what's your biggest escalation worry going into next week, Joe?
I think the Fed is what we're going to look forward to coming into this week. Because coming into this year, the biggest question on investors' minds was when was the Fed going to end their rate hiking cycle. And the ongoing belief was that it was going to be when inflation came down and economic reports showed that the economy was slowing down. But last week threw a wrench into all that with Silicon Valley Bank. So now the Fed has to consider if all of their rate hikes could potentially lead to problems in the banking system. So I think we need to be defensive and wait for clarity as far as for next week. Wait to hear what we hear from the Fed and any ongoing news from the financial sector.
Delano, same question to you as you look into next week. Is there escalation risk out there on your horizon?
Yeah, I think what Joe mentioned with the Fed and what's going to happen next week, I think that's one aspect of it. I think if you look at, also the earnings estimates that we have on the S&P and different areas for different companies, those estimates were, although not too high, the projections may have to be lowered down or re-rated down a little bit. If you now look at what's going on within the banking system, I think we have, at some point regulation come in and get tighter. I think you have the banks that will be a little bit more risk averse when it comes to lending. And I think that ultimately could potentially slow down our economy. You saw Goldman lower their projections on GDP and other banks doing the same. And so I think that's another risk that investors have to look at. I still do anticipate a 25 bips rate hike. And I think that, we've been rallying, as Mike was saying, in the tech sector because of that skew away from, the banks. So those are areas also for investors to look at.
Mike, go ahead, jump in here with a question.
Yeah, Joe, I guess I'd love to hear your thoughts on whether we can continue to have this kind of selective market where you do have a lot of the growth stocks that have kind of their own stories, and they had a tough year last year, can continue to really buffer what's going on in the rest of the market because of all the macro stress.
Yeah, this week, for sure, the biggest question was on investors' minds is what the Fed is going to do, and also considering rebalancing, how to rebalance people's portfolios. And as you mentioned earlier, the S&P was up 1.4%, but the NASDAQ was up 4.4%. So as I always like to say, it's not the news, it's the market's reaction to the news. And market participants were repricing in possibly a quicker end to this rate hiking cycle. So the NASDAQ had that shift over because, number one, they have less exposure to financials. Number two is that they're more stable. A lot of people like them kind of as a defensive sector as far as the big mega cap tech with more stable, reliable earnings. And also because of the drop in interest rates, money tends to rotate into tech. Whether that can hold up, we'll see. But for sure, the markets are moving quickly. And we just have to wait to see what the Fed says next week.
For sure. And on that score, Delano, I keep saying this week, the last few days, that Jay Powell at the Fed probably really hopes for the circumstances under which he can raise rates by a quarter point, kind of make it seem like this is all going according to plan. There's nothing they need to react to urgently in the financial system. We really don't know if that's going to be the case. I mean, we don't want to be alarmist about it, but we have a few days before we see if that's the way it goes. Do you think that the stakes are very high as to whether it's a quarter point or it's nothing or what they say thereafter? Because we've already gone from 0 to almost 4.75% in a year's time. So it wouldn't seem like what they do next week would be the make or break.
Yeah, it wouldn't seem like that. I do think the Fed has a tough task here, right? And as you mentioned, the expectation of the market, if you're looking at yields dropping, their expectation is that yields the rates are gonna go down here, relatively soon, right? And so I think they have a tough task because on the one end, you're still battling inflation that although the trend is going downwards, it's still high in different areas, right? And it's still running hot in different areas. And that's been their main thing that they're combating. We still have an unemployment rate that's at 3.6%, which, if you look at, severances falling off and whatnot in the summer, that may start to rise a little bit. So it is a tough thing for the Fed to battle. But I do think, if you're looking at the communication that's been delivered to us so far, inflation being number one on the Fed's mind, that's going to be the way they look at things. And then to give the guidance on going forward. I think consumers right now are still being hurt on the inflation side. I think that's going to be the area that they pick.
And Joe, you've mentioned you really counsel people should wait and see what the Fed does. And I assume wait and see how the market reacts to it. What would be your sort of game plan in terms of approaching that? Are you looking for, the market to have a little bit of a panic or some kind of a big retreat that you would take advantage of, or do you want to see the market shrug it off?
I'd like to see it shrug it off. To Delano's point, the Fed has a big challenge right now. Do you fight inflation and do you stick with that, as Powell said in his recent testimony to Congress, or do you have to deal with this potentially problem with the banking system? And that's a big challenge right now. So we'll have to see if it's a dovish hike or a hawkish pause, as people have been saying. And I want to see the reaction to the news. But what I'm specifically, from a growth manager's perspective, what I'm going to be paying attention to are the stocks that are holding up well. For example, semiconductors were very strong this week. I'm going to pay attention to the ones that can withstand this downturn, because eventually the market's going to price in a lot of this bad news and start to look forward.